Time now for the business news with Catherine Bennett. Good to see you, Catherine. Now, last week's talk between the OPEC Plus group of global oil producers stalled. The meeting is going to pick up again today to settle the differences.
That's absolutely right. So they're trying to agree on how much crude oil to put back on the market since they slashed output a year ago because of the pandemic. Now, they want to increase output by 400,000 barrels a day from August to December. But they can't agree on a proposal to extend those measures until the end of next year. And in particular, it's the United Arab Emirates who is blocking the agreement. The UAE says that if they're going to extend the deal, it wants better terms. Now, that's turned into quite a public spat with Saudi Arabia. Saudi Arabia told Bloomberg that it was a case of the whole group versus one country. Let's have a listen.
إنه هناك جهدا كبيرا بذل في خلال 14 شهر الماضية حقق إنجازات خيالية يعيب علينا أن لا نحافظ عليها وشيء من التنازل وشيء من العقلانية والمخلص الحقيقي لنا.
If they fail to reach a deal, that could push the price of crude oil even higher and threaten a delicate global economic recovery from the pandemic. Well, as we've seen earlier today at France 24, it is the end of an era at Amazon. Jeff Bezos is stepping down as CEO and being replaced by Andy Jassy, who will be handed a handsome stock prize worth more than $214 million. The 61,000 shares will be vested over the next 10 years. In the past decade, the company's stock price has increased by more than 1,500%. So if Amazon's stock price continues to rise, that could become an even larger sum. Jassy is already the second largest shareholder at the company behind Bezos, and he already owns more than $300 million worth of Amazon stock. China is cracking down on one of its own tech companies. It says that the ride-hailing app Didi has violated laws on collecting and using personal data, and as a result is being removed from app stores in the country. Didi went public on the New York Stock Exchange last Wednesday, and so this move by authorities is seen as a reaction to that. IPOs in China tend to draw more regulatory scrutiny. Catherine Viette has the story.
Just days after a triumphant IPO in the U.S., Didi is in hot water with China's Cyberspace Administration. The regulatory body has accused the ride-hailing app of illegally collecting users' personal information and ordered it to be removed from China's app stores. The decision won't affect existing users. In a statement, Didi warned its removal would adversely affect its business, but also said the company will strive to rectify any problems, improve its risk prevention awareness and technological capabilities, protect users' privacy and data security, and continue to provide secure and convenient services to its users. Didi gathers and holds vast amounts of data daily, including addresses, phone contacts, and audio recordings of car rides. It's China's biggest ride-hailing app with more than 377 million users and 13 million drivers. It also operates in 15 other countries. But it's not the first Chinese tech company to run afoul of the Cyberspace Administration of China. Beijing has been cracking down on the sector, a move that some analysts say may be politically motivated. On Monday, the CAC also said it will investigate Chinese truck-hailing firm Full Truck Alliance. Like Didi, the FTA recently held an IPO in New York.
Markets in Asia have been reacting to that, with indices mixed in trading at the start of the week. Shares of Chinese tech firms in Hong Kong dropped as a result of this crackdown on Didi, sending the Hang Seng Index tumbling over 0.5%. The Nikkei was also in the red, while the Shanghai Composite is up almost 0.5%, and the Kospi climbing up about 1/3%. Europe saw a tentative open this morning. Now, that's since stabilised somewhat, with the FTSE pushing up by 0.25%. The CAC 40, however, is still stuck around the flat line, and the DAX also moving downwards by 0.1%. Well, staying on news from the tech world, Bitcoin's algorithm has recalibrated itself in order to take into account China's crackdown on the cryptocurrency. For a long time, China has been at the center of global Bitcoin mining. Up to 3/4 of the world's mining was happening in China. But since June, when the country shut down a huge number of Bitcoin mines, suddenly global processing power plummeted. More than half of the hash rate, that's what we call the collective computing power of miners across the world, was wiped out. The algorithm has automatically adjusted to make up for that shortfall. So now not only is it easier to mine, but it's also more profitable. Bitcoin miners who have managed to stay on the network are therefore seeing a welcome bump in revenue, while the hash rate tries to get back to normal. And the cargo ship that became world famous overnight when it blocked the Suez Canal earlier this year is due to set sail again. The owners and insurers of the Ever Given have reached a settlement with the Suez Canal Authority. It blocked the canal back in March for 6 days and was finally dislodged on the 29th of March. Since then, it's been held in a lake near the canal and not allowed to leave. Well, its detention is finally over and it will be able to sail off for new adventures on Wednesday.
Can you imagine it held up the world, like half the world straight for the span of a week? It's crazy when you think about it. Catherine, thank you very much for that. Catherine Bennett there with the business news. More news coming up. Stay with us. It's France 24.